Traders, if the high-level liquidity sweeps and order block defenses we unpacked last time, have you filtering out 80% of the noise for those 70% plus win rate plays on Nifty and Bank Nifty? Then we're going even deeper now. These are pro-level price action setups that layer multiple confirmations for 75% plus edges. Advanced pattern spotting institutional inducements and mitigations that most advanced traders still overlook. No basics here. These target the market's hidden order flow, like engineered traps and value gaps that lead to 250 to 450 point runners. For end 2025 trading with FII positioning ahead of budget season and those 400-point expiry dashes, these setups put you ahead of the herd by reading the market's why behind the price. I'm Trading Core, and in this 20-minute pro breakdown, we're diving into 5 elite price action setups for Indian scalps and swings: the fair value gap mitigation, the breaker block reclaim, the inducement liquidity raid, the session high exhaustion trap, and the displacement imbalance chain. Brand new, no sweeps, blocks, or flips from before. These zero in on gaps, breaks, and raids where institutions manipulate liquidity for high prob entries. For each, we'll cover the setup details, why it crushes the institutional trap, step-by-step spotting, full entry-exit mechanics, NSE risk for wild swings, pro mistakes to dodge, and a stack for 80% plus confluence. All raw price action. Fire up your 5-minute, 15-minute, or 1-hour charts on Zerodha Kite, TradingView, or whatever you use. Let's start the topic. These setups shine at 75% plus because they demand dual confirmations, like a gap plus a raid, ensuring the move has institutional backing, not retail steam. Stick to 0.5% risk per trade. Hunt in 9, 15 to 10, 30 a.m. IST open liquidity, or 2 to 3 p.m. London overlap, and cap at 1 to 2 setups. Daily. Backtest 50 charts to own them. Patience turns pros into consistent plus 35R months. Kicking off, the fair value gap mitigation. The fair value gap mitigation is an advanced continuation where price leaves a 30 to 50 point inefficiency gap, 3-candle imbalance with no overlap, then mitigates retests only 38 to 50% of it before pushing through with a strong body close. The gap forms from a quick displacement candle. Mitigation candle touches mid-gap without filling fully. Why it crushes at 75%. Institutions create gaps as fair value voids to pull retail in for fills, but mitigate shallowly to resume, trapping full fill chasers who think it's a reversal. Small traders short the mitigation. Big money uses it to reload longs, fueling the chain. Spot it on a 5-minute Nifty uptrend. Step 1. Identify gap after sharp up candle high of candle 1 below low of candle 3. Step 2. Price pulls back to mid-gap eyeball, 40% fill. Step 3. Confirm. Mitigation candle closes above mid-gap with body gap width 2, no lower wick past mid. Enter long above mitigation high on next close. Stop below gap low 15 points, 0.4% risk. Target full gap projected plus prior swing 1:3 ratio. Exit half at 1, trail the rest on new highs. Pro mistake. Entering full fills. Shallow mitigation only, or it's exhaustion. Skip if volume doesn't pick up on close. For Bank Nifty, trim to 0.3% on gap volatility. Stack with a breaker block below the gap for 78% mitigations and 300-point chains. This mitigates post-open gaps, turning pullbacks into trend extensions. Next, the breaker block reclaim. A breaker block is the last down candle before an up displacement strong bullish break, reclaimed when price dips back into it, but holds the block's body with a bullish close inside. The block is 20 to 40 points of prior bearish order. Reclaim touches but doesn't break below. Why 76% edge? Breaker blocks hold unfilled sell orders. Institutions reclaim to sweep remaining liquidity, then reclaim upward. Small traders sell the dip into the block. Big money defends it as support, reclaiming for the rally. On a 15-minute Bank Nifty chart. Step 1. Spot displacement up from a bearish candle base the block. Step 2. Price retests block body, not wick. Step 3. Filter. Reclaim close and blocks upper half plus small tail up, higher volume, then dip. Enter long above block high on close. Stop below block low 20 points. Target block height x3 from reclaim 2 is to 1 min. Partial at prior displacement level. Dodge. Reclaims below block body. That's invalidation. Wait for hold close. Risk 0.4% on Nifty for false reclaims. Trail to block mid after 1R. Pair with inducement rate above for 79% reclaims and 350-point pushes. Strong for midday retests. Reclaiming trends without loss. Now, the inducement liquidity raid. Institutions raid above a high to induce buys, fake, breakout. Then reverse below with a bearish engulfing, trapping induced longs. The raid is a Onitato candle spike above high by 25 points, followed by close below the high and prior candle low. Why? High prob 75%. Inducements lure retail into wrong side liquidity. Big players raid to flip. Rating stops for the drop. Small traders buy the raid high. Institutions sell into it, rating for the reversal. Spot it on a 1-hour Nifty range top. Step 1. Mark recent high consolidation top. Step 2. Raid wick spike above. Step 3. Confirm. Raid close below high plus engulfing body down, volume spike on reverse. Enter short below raid low. Stop above raid high 25 points. Target raid height XTWO 0.5 down, or range low 2 is to 1. Mistake. Shorting without engulfing. Need the flip close, or it's a real break. Avoid low volume raids. For NSE, 0.5% risk, but cut if no follow-through in 3 candles. Add session exhaustion at the high for 77% raids and 280-point drops. This raids false breakouts, inducing traps for clean shorts. The session high exhaustion trap traps when price exhausts at the session high 9:30 to 3:30 range top, with 3 equal highs over -8 candles. Trapping on a failure, close below the third high. The high's wick equal within 10 points. Third high closes below with fading bodies. Y 74% wins. Session highs, draw, exhaustion buys. Traders chase the top. Institutions trap by pushing equal highs to load shorts, exhausting buyers. Small traders long the highs. Big money sells the trap for the dump. On daily Nifty to 15-minute session view. Step 1. Track session high from open. Step 2. 2 equal wick tests hold. Step 3. Filter. Third, equal wick but close below high plus body shrink 30% volume drop. Enter short below third close. Stop above session high 20 points. Target. Session range X zone 0.5 down 2 it's to 1. Avoid unequal highs. Need 3 matches for exhaustion. Skip if midday. Risk 0.3% on Bank Nifty for high traps. Combo with imbalance chain below for 80% traps and 320-point fades. Traps end session highs, exhausting into close. Finally, the displacement imbalance chain. A displacement sudden 150-plus point thrust leaves an imbalance unfilled gap. Chained when price re-enters shallowly but displaces again with a larger body. The chain is gap plus 50% re-entry, then second thrust, body 1.5x first. Y 75% plus, displacements chain momentum after imbalances. Institutions use the gap to accelerate, chaining retail shorts. Small traders fade the first thrust. Big money chains through the imbalance for the run. On 5-minute Bank Nifty, Step 1, spot first displacement gap. Step 2, re-entry to mid-gap. Step 3, filter. Chain thrust closes beyond gap high plus body bigger, no pullback wick. Enter long. Above chain high. Stop below. Imbalance low. 25 points. Target. Combined displacements projected 1:4. Pro error. Chaining full re-entries. Shallow only. Cap at 2 chains. 0.4% risk. Partial at first displacement level. Layer with fair value mitigation in the gap for 78% chains and 400-point surges. Chains open displacements. Imbalance fueling the close. Pro routine. 9 a.m. Map dailies for highs and gaps. Scan 5 and 15-minute inflow times. 1 elite setup. Log. Confirmation held? These deliver plus 35R monthly at 75% plus. Favorite, gap mitigation or inducement raid. Comment below. Like for the edge. Subscribe for Nifty Pro tips. Trade elite. See you in the next video.